Hey, good morning. It's the day after the Fed day. What does that mean? The Fed disappointed. The Fed was confusing. The Fed didn't cut as much. The Fed said they weren't going to cut in the future as much as people thought. And everyone's getting out of their short trades. And what does that mean? Dollar strength. But don't worry, everything can change tomorrow during non-farm payrolls. So let's go. So good morning. Hey, my name is Wayne McDonald. I'm the Chief FX Market Strategist for TradersWay.com. So today we're going to cover dollar pairs, yen pairs, gold, oil, and whatever else you want. Just make sure you ask. In return, would you please do a little thumbs up? Would you please subscribe if you are new? And of course, would you please visit TradersWay.com and pay back? Pay it back, man. If these webinars are helping, pay it back. Visit TradersWay.com, open up an account. Even a demo account, it's a good place to start. Just give us the opportunity to earn your loyalty and respect. That's all I'm asking for in these webinars. Also, if you download MT4, you can come back to this video. Just below the video, you'll see a link that says download all my chart templates for free. So you can have my entire MT4 setup. So my charts now look like, or your charts look like my charts look like your charts. Everything is golden. Okay? Oh, you know what? I don't have up. Where did they go? My charts disappeared. Hang on. Almost there. Well, I guess I can do this. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please, 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 stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Ta-da! So there we are. And after the big news yesterday, I don't know if you attended the live event I did for the rate announcement, but Euro got down into here, and we said be very, 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 very careful because this area and this area and this area and this area, they're all areas of support. So, you know, if you were a swing trader, like let's go back into the very basics. So let's not even talk about the Fed meeting. Okay? Not even talk about the Fed meeting. What do you do if you're a bear on euro dollar? If you're a swing trader? You sell here. See it? Both on a weekly and a monthly basis. That's it. Then you say, well, what about the Fed meeting? Yeah, what about it? Did anything change? Not if you're a bear. And that's the whole point. Now you could say, well, Wayne, what if they announced there was going to be there was going to be 5 more rate cuts? You know, wouldn't we be up here? Well, yeah, in that case, if you're a bull, you would have made money. The message I'm trying to get across is if you have a bias, okay, I know I say it every day, but I have to say it every day. If you have a bias, in the days that the market agrees with you, you will make money. On the days the market doesn't agree with you, you probably won't even trade. This job will do gold. You see what I mean? That's what you want to get to. You want to get to that point. Your ability to trade and beat the market, that's your alpha, right? You don't want the alpha to provide you with your career. I know it sounds a little weird. You don't want a career of trying to outsmart the market. First of all, it's very difficult. It takes a lot of time, a lot of effort, and you're going to get unlucky a lot. You don't even want to try. What I'd rather you do is set a bias, and now we're talking beta. The market is what sets your profitability. Not your ability to beat your market, but just being the market. Okay? So like, let's say if you were a bull, well, there was probably an entry here, and then there's a role reversal, and then there's something going on here, and then whoop, 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 but then it's back to a role reversal, and you made all your money here. Then you probably tried again, wah, wah, wah. But down here you tried again. You did all right for a few days, wah, 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 wah. Did you buy here? No. Did you buy here? No. Did you buy here? No. Did you buy here? Yeah, that was a plausible buy. Okay. You see me? Like, you had a few losses along the way. Like, you probably didn't do well in this period. You probably didn't do well in that period. You might have tried again in here. Not really, if you look like that's not a proper setup. But okay. But so you had, let's say, you did all right here. This is not a buy. You never even had a chance. So you probably had like 6 winners and 3 losers, and if you carry out a career like that at the end of the year, you're very profitable and you're very happy, and there was no drama in your trading. Okay? You understand? Like, that's where I want you to get. I want you to focus on the beta. Okay? The beta is the market. So I want you to have a bias, and when the market moves down and you're a bear, you make money. When the market moves up and you're a bear, you don't trade that often. Okay? Okay? So if you just happen to be a bear, this you would have sold here, and you're like, oh, the market agreed with me. Great. Do you sell here? No. So what are you going to do next week? Oh, you'll sell here. Done. You're already done next week's trade plan, right? Like, nice. So that's where I'm trying to get you. And yesterday would have worked out really well for you. But selling now down here is really undisciplined. Okay. So, but let's talk about this now. This is euro dollar. I don't know why there isn't a watermark on this. Let me change it. Must be an old template. Okay. Let's get rid of that. All right. The Fed cut interest rates and the dollar gets strong. So we talked about this yesterday, and I explained why. So let's just not review all of that. Let's just say, okay, dollar strong. Okay. One thing you can do with this dollar strength if you want to stay with it. Now, there are additional cuts still priced in. The Fed will still probably cut in September. They'll still probably cut in December or something, right? So there's still some cuts coming in, but Chairman Powell really screwed up yesterday's meeting. It was a bad meeting, bad press conference. Nobody understood. He was even asked, like, dude, how could cutting interest rates even improve the economy under these circumstances, like full employment and all this? Like, how does a cut actually help? He couldn't even answer that. Like, oh my God, really? So it was a bad press conference. It sounded like there wasn't going to be as many cuts as people wanted and all that kind of stuff. So we have to deal with that. If he continues cutting but still keeps talking like there's less cuts in the future, then the dollar stays strong. I don't know, whatever. Let's just say you're a dollar bull now. Okay? Let's just say because of yesterday, you're a dollar bull. Right? Yeah, that's true. Right, Brookie did. So anyways, let's just say you're a dollar bull. You believe there's less cuts in the future than what was priced in. Okay? I don't care how you determine this. But let's just say maybe you said, okay, now that we've made a lower low, I'm a bear. Good, whatever, I don't care. It doesn't even matter. Okay, cool. So what do you do now? Well, first of all, this is interesting because what's the interest rate now? Between 2 and 2 1/4? What's the interest rate on the euro? What is it? Negative 2? Negative 2 1/4, something like that. Negative something, right? And probably going to negative 4, but whatever. And this is a plus 2.25. So if you are short this pair, you are going to earn 2.5% interest payment. And if you're leveraged 100 to 1, you are going to earn 250% a year. If you're short, okay? Now, there are other costs, interbanking fees and stuff, so let's actually find out what it is. So we want to know about being short. Short swap, 3.36, even better. All right, so if you are short this pair, you will earn 336% a year in interest payments. So if you do one standard lot short and held it for a year, costs you $1,000, well, you'll earn $3,360 in interest payments alone on your swap. You'll earn that, not percent, sorry, dollars, on your swap, okay? So what am I getting at? If you believe the dollar is going to stay strong for a while, whatever that means, then you can start to carry trade. That could be a basis of one of your strategies. Okay? You can start carry trading, which means now you have a bias. It doesn't have to be everything. You could just have a portfolio. So open up another account at Trader's Way, put some money in it, and say, it's my USD ultra long fund, which means you cannot short dollar. You can only long it in that scenario. And one of the benefits of that portfolio is it's really a high yield. Okay, a high yield carry trade. So you could say, well, with that information, I want to look at all dollar pairs and I have a bias now. What's your bias? Which one do I want to do? Let's do this one. You want to buy dollars. Cool. So you're looking at prices to short pound dollar, prices to short Aussie dollar, prices to short Kiwi dollar, and prices to long USD CAD. You see what I mean? Maybe you're, are you on an ECN? Are you on a fixed spread? Are you on a different broker? But 6.1 sounds like way too much for Euro USD. It almost doesn't make any sense. Okay. Okay, TBM. So anyways, that's the thought process is what I'm trying to share with you. Okay. Is that right, Stephen? They'll figure it out. So that's another way of doing it, Stephen. Stephen, you could be watching the Bank of England press conference and you say, wow, the Bank of England's really struggling because the economy isn't achieving its goal, the goals that the Bank of England has for the economy. But it's a fiscal scenario. I think that's the right word, a political scenario. It's a political scenario going on that's hurting the UK economy. So what does a Bank of England do? So you could say, well, there's very little it can do. So based on that reasoning, you are looking to sell pound. So now you can have opened up another account at Trader's Way, funded with money, and you can say, this is my British pound ultra short fund, my Brexit fund. And you're looking for reasons to sell this, 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 but you know what you're going to do. You just don't know at the price and what time. So then you use technical analysis, which is really easy. right? And you say, so the things we don't know, the price and the time. So we could say, well, let's talk about it. What price, what are the opportunities to sell? Well, there's sort of one here, but with the news and all that, that's a little tough. There's another price you'd be interested in here, and there's a price you're interested in here. Okay, this one being a 21, which is a dynamic short. Then here's a central short, and then here's a definite short. So now, through your hardcore analysis as a currency trader, you're like, well, I kind of missed this one. Oops, let's do a different color than yellow, as they say in Georgia. Let's do orange. Okay, you had an opportunity to sell there. So maybe you took it, maybe you didn't. Okay, let's assume you didn't. Great. Do you sell lower? No. Do you sell lower? No. Do you sell lower? No. So where's the next sell? Here and here. So now you got two prices. So you solved at what price would you sell? What you still don't know is when, the time issue, right? This is price over here. This is time over here. Okay? So when do you sell? When will it hit this price? When will it hit this price? Well, you don't know. So you wait. So you're like, okay, well, probably not today. Okay, so let's look at something else. What is this? Pound Aussie. Let's see. I already set you up on a trade plan. Look at the target I gave you. Holy snap! Look at that! Do you guys remember doing this? Profit taking, counter trend, weekly swing, target. Holy snap! Prince Philip says, I remember you said the UK wanted to drive the price down in Titanic fashion. Why can you tell us why? Why does the British public want Brexit? I don't know. I'm not British. I'm not English. I don't know. I don't know. They were not happy working with the Europeans. They decided they don't want to work with the Europeans anymore. Why? I don't know. But they're doing it. So then they got Theresa May to like, get us a deal, Theresa. Theresa didn't get a deal. So they're like, get rid of Theresa, put in a real negotiator. So that negotiator is going to go in and get zero. Okay? Now they've decided they want absolutely zero. Well, why do you need a negotiator for that? So, I don't know. So maybe Boris goes in, negotiates really hard. The Europeans start freaking out. And they're like, oh man, this is going to really hurt us. And what Boris gets out of it is that they don't give up Ireland or something. I don't know. I don't even follow. I don't know. There's, people get really fired up. I don't know. They'll figure it out. I'll keep trading and making money. Okay? But why? I don't know. And people love it. People love it. It's like a soap opera. People really, really follow this stuff every day. He said this and she said that, and this is going to happen and all that. I'm not that type of person. I like sports. Like I was very athletic as a young person. I love playing sports. I don't follow teams. I don't have favorite teams. I don't have favorite players. I don't have fantasy leagues, all that kind of stuff. Even with economics, I don't listen to other people's opinion. I just do it myself and all that. So I'm not a person that gets all caught up in the drama of it. I hate drama. There's drama in my neighborhood and the board. There's something going on with the board, and some neighbors are really freaking out, and there's all this drama. I'm like, I don't care, dude. If you want to be the chairman of my neighborhood, by all means, be chairman of my neighborhood, if that's what's important, right? So anyways, I don't get caught up in Brexit. I don't get caught up at Powell. So I'm not going to. Powell sucked. I mean, yesterday's meeting was just a disaster. So what I care now is the dollar going to remain strong? Great, let's do that. Or if the pound is going to be weak, I don't really care why the great British public want to destroy their economy. I don't really care. It's not my economy. If real estate prices get cheap in London, I visited London, what was it, 2 years ago? It was beautiful. I was there on a beautiful day. It was warm and sunny, and the flowers are blooming, the birds are chirping. I'm like, hey, man, I could live here, but I don't want to pay 20 million pounds for an apartment. And the funny thing is, not apartment, like a townhouse, but then you have to park your Bugatti Veyron, you have to park it on the street. I'm like, for 20 million pounds? Hell no. So, right? Now, Mark says Carney seems knowledgeable. Yeah, well, he was a very good central banker in Canada because of his policy. Also, at the same time, he sort of had a sidekick partner, if you will. The Minister of Finance for Canada was very similar-minded, very conservative, very disciplined approach to their economy. So you had a central banker and basically the government and the central bank both had the same point of view. We're very conservative. And Canada essentially wasn't in the global financial crisis. Amazing. Just absolutely amazing. So that's the Bank of England then hired Carney out of Canada with that sort of mentality. And things are going really good until Brexit came along. And you could see it in Carney's eyes like, oh my God, what are you guys doing? But there's nothing he could do. Yeah, Ed says they do that all around the world too, but it's funny. So, hey man, all I care about, see, I'm an entrepreneur. So let's think of it this way. If something happens in UK and because of that prices in London fall, I'm a capitalist. Okay, do you remember the discussion we had somewhere the other day? Someone said, like, the price of gold is falling, the price of gold is falling. And someone read somewhere that it was being dumped. Traders were dumping gold. Like, well, no, they're selling it to somebody else. And probably at a lower price than what they paid, right? So maybe that's what it's dumping. But what if they sold it to someone else, but they bought it for cheap? They're just exchanging an asset for money. So if they're dumping gold, someone at the exact same transaction is buying gold. So you can say, well, someone's buying gold from all these people selling gold. Like, you can't sell gold if there's no buyer. You can't buy gold if there's no seller. So this whole idea, like, things are dumping. No, they're just changing, they're changing ownership. It's a transaction. So, hey, if the UK economy collapses because of politics, great. Not my problem. I don't live there. But as an entrepreneur, if real estate falls by 50% and the currency falls by 50%, then I look at it and I'm like, oh my God, I can get a nice flat in London for cheap relative to what it was 10 years ago. So then all of a sudden I show up and I'm like, hey dude, I'll buy your flat and I'll pay you in dollars. Boom, I got a good deal, right? That's all that matters. And what happens? Well, eventually as foreigners come back to London, let's say, because London is a fabulous world capital, foreigners will start coming in. They're like, hey, now I can get into London. And they start buying at the low price and prices stabilize and then they go back up. And the money is attracted back to the economy. It ebbs and flows. That's all. It's only money, right? It's only money. So if there's some prince out of Dubai that paid $20 million for a flat in London and he wants it to sell it to me for 5 million pounds, great. All better, right? Now I can buy it at 5 million pounds. But the thing is then in terms of dollars, British pound has dropped by 50% from what it was 10 years ago. So now I'm like, well, 5 million pounds, right? Cut in half. Now it's only 2.5 million pounds relative. And I'm like, oh my God, it was 20. Now I'm paying 2.5, right? Like, I'm getting an 85% discount. That's all that matters. So now I'm a buyer. Love it. That's the awesome thing about entrepreneurialism. Right? And if you're British, you're like, this is really hurting me, get another passport, You can live in the UK, but pay taxes somewhere else or something. I don't know. It'd be flexible is all I'm saying. So, all right, let's go back to this. What was I trying to say? You might have a new bias on US dollar based on new information we learned from the central bank directly. Not from CNBC or Bloomberg or Wall Street Journal or Investors Business Daily or Financial Times and all this kind of stuff. You watch the press conference, you're like, dude, too many people were short dollar, and now they got to get out of those trades. So while they're getting out of those trades, dollar's going to get strong. This may last a while. So based on my analysis of what was said fundamentally and how the market's behaving technically, I want to be a dollar bull. Plus, I'm going to carry, I'm going to catch the carry. So I'm going to buy dollar, ideally against cheap currencies. European currencies would be great. Your European economy sucks. British economy sucks. So right there, pound dollar, euro dollar short, and then long USD Swiss franc because of the carry. You're right. That might be offset a little bit with money leaving Germany and leaving London and moving to Swiss bank accounts. But anyways, right? Right? You see what I mean? So you make a decision. And then what about Brexit? You're like, yeah, Brexit's getting worse and worse. Well, why is it accelerating down? There's been a change in government. You see, these are the fundamental changes that matter to a currency trader. So very often I hear things like, hey, this skirmish between Japan and China over islands in the South China Sea, is this important? And I said at that time, well, when missiles are in the air, it's important because it might get someone to get out of their multi-billion-dollar portfolio. But if it's just rhetoric, it's not important enough. Well, how about this NFP thing? Or how about this other announcement? Or how about this other data point? Data points a trend does not make. Okay? But fundamental, remember, there's a difference between news and fundamentals. Don't just say news is fundamentals. News is news. There's economic data releases that are on the calendar. They're the known unknowns. And then there's the unknown unknowns, things like, Trump says something to China and China says something bad and all that kind of stuff. And they're like, there's not going to be a deal forever. We're never going to work with Donald Trump. We would rather just wait for the election to be over than deal with Donald Trump anymore. Well, then that kind of moves things around, right? But the big things you can count on are central banks coming out and changing policy. Boom! That's a fundamental change. Or how about change of a government? Boom! That is a fundamental change. Okay, you see? There's difference between news and fundamental changes. So you could say, well, fundamentally, based on the new government in the UK that seems poised to just get out of Brexit and do it with a hard Brexit, right? Not even negotiate with Europe. Then, okay, then great. The consequence of that would be a weak British pound. Because that can't be good for economics, can it? Right? What is there? Is there 380 million people in the European bloc now, in the Eurozone? And the UK says, we have a deal with them now on how to work together, but we want to get rid of that. We just want to get rid of the 380 million people. Well, that can't be good for the economy, right? That's all I'm saying. It's not a political opinion, right? So therefore, you could say, well, based on that, I'm going to be a bear on British pound. I'll be a bear today. Does this mean you're going to sell today? Not there. Okay, you might sell this on Monday in here or Friday tomorrow during NFP, but you'd rather it be here and you'd rather it be here. So we'll go back to how we planned this in the other trade, right? Plan A, Plan B, Plan C. Good. You got next week and next month planned out. Done. But the cool thing is you're not really trading the dollar on this one. This is a Brexit. So you're like, okay, so I got that, and you move on to the next trade. So, right, maybe you put a little arms there or something. So what is this? Aussie. Okay. Looks a lot different of a chart. So where do we want to be short? So you already know you want to be short. You don't know if Aussie is going to be strong or weak next week. If it's strong, you're going to do really well. If it's weak, you're not going to really get much of a trade set up. So I'm thinking maybe tomorrow I'll be short here. There's plan A. Plan B is here. Plan C is a triple top. Done. Next. Set alarms if you do. Excuse me. Done. See? Now what? I want to sell British pound. What is this? Kiwi. All right. Great. So let's see. Where do I want to be short here? All right. Well, maybe next week. Well, we're at here. So this would be a fantastic plan A. And this would be a mediocre plan B off of the top here. Okay. This would be ideal. Looks like maybe a 618 Fibonacci retracement. That would be great. Come on, Kiwi. So now you're cheering for Kiwi. Come on, Kiwi. Okay. And is there a decent swap on this? Probably not. But, you double check. Do you want to be short this long term or do you want to be short this short term? Pound Kiwi. I'll never see this pound Kiwi, pound dollar. Yeah, there it is. Short. Oh, it hurts you both ways? That's a negative, right? Yeah, so these are day trades. Okay, these are day trades. So this is not a good carry, it's a bad carry. By the way, when did I do this? I already have it planned out for you guys. Look at this. I already did this. You notice that? I did this over a week ago. I already got a plan for you. Roll reversal off of the monthly pivot. Look at that. I already did this. There's the sell zone. Here's the target. So now the next move should be something like this. Yeah, last week. Yeah, look at this. So you should already be up quite a bit actually, huh? It's already moved. Oh, I see, my eyes are so bad now. I can't read that. I'm sorry, I can't read that. I wish I could zoom in somehow. So it's moved quite a bit though anyways. It's gone from M3 to M2. That's pretty good. So now the follow-up move is this and this, which I already planned out for you on the other time frame. Okay. Right there. That's next week. Already planned out the whole month for you. Okay. So cool, right? Like, you see the value of trade planning, guys? The thing is, I think some of you go looking for trades. So you start putting cross pairs together and I think some of you, not all of you, probably look at 1,000 different combinations of things looking for a trade. Here's the problem with that. When you go looking for a trade, first of all, you will find one because you are looking for one. Okay? The second thing is, when you find one, you're already late. Manipur says up 150 pips already. Okay, cool. Someone else says 450 pips. All right, well, either way. You got to be careful, though. A lot of people, when they're saying 450 pips, what it really is 45 pips. Because of fractional spread. So I'm hearing this a lot now, like, I made 1,000 pips. I'm like, no, you made 100 pips. So when I say 1,000 pips, I mean, it should take you 3 months to make 1,000 pips, not 3 days. But anyways, that's just a thing that I've been hearing lately. But when you go looking for trades, you find them and you're already late because you found them, which means they've already set up and they've already happened. And you're probably in the second or third wave of a trade that you're supposed to plan in advance, right? So what you're doing today, and I want you to really think about this, I want you to hear me. What you should be doing today is planning tomorrow's trades and Monday's trades. Okay? You see what I mean? If you go looking like for something to do today, you have already lost your money. And maybe you don't lose it today and you don't say, hey, Wayne, look at you. Screw you, Wayne. I still made money. Yeah, well, in the long run, you'll be broke. So you'll lose money today or tomorrow or the next day. It doesn't matter. Okay? But you'll lose it if that's how you trade. You will lose. It's sort of like gambling at a casino. You walk in the door, you've already lost money. You're like, well, that guy over there made money. How about him? On the aggregate, everybody's lost. Right? I'm a goat. I don't even know what a goat means. I don't know if I should be insulted or not, but Leroy, thank you, I think. Thank you. So anyways, if you look for something, you're going to find it, you're going to be late, and you're going to lose money. So, listen to Uncle Wayne. Think about tomorrow, think about next week, think about the rest of the month. Start identifying your prices. Like I just did on a whole bunch of pound pairs, right? Look at this one I did for you a week ago. 10 days ago, right? That's how you trade. If I remember this correctly, we were moving up and I put this ahead, okay? I put this way ahead. We weren't even there yet. And I said, well, based on this pivot and that price, I can base on this, and my hate for the Great British Pound. I don't hate the good people of the UK, but the pound sucks. So based on all that, well, somewhere around here would be a good price to sell. And based on all that, technical analysis tells me that somewhere around here I should take profit. Boom! Money in the bank, brah. That's how you trade. Not like, I wonder what's going on now, right? Here's how not to trade. Let's get on a 15-minute chart and let's get going. Right? This is how most people are looking at their chart. Okay. Well, it's been doing higher high, higher low, higher high, higher low, higher high, higher low. I missed all of those, but now I'm going to start buying dips. And of course, you know what's going to happen next, right? Right? You missed that one, you missed that one, you missed that one. You missed that one, so now you're going to take the next one because the next one's going to work too, and you're just responding to this. Right? And sometimes that works, and sometimes it doesn't. Now that I'm on a 1 hour chart, check this out. This is a sell zone, bro. This is a sell zone. So as soon as you start buying, down, boom, 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 boom. Okay? Okay? That's the problem. That's the problem. That's why you need trade plans in advance. Okay? And then I back out to a 4 hour, and you'll say, oh, son of a gun. A professional trader would have already identified all of this, already has this as a giant sell zone. It's probably already sold at the top. This is a take profit zone, which they knew up here, right? and they're anticipating getting back into the market, back in the direction of the original trend. Meanwhile, amateur traders are stuck. All they see is this, and it means buy to them. And even if they're right and they make money today, they'll do it again tomorrow, and it'll crash tomorrow based on our technical analysis. Okay? Right? So I need you to back out a little bit before you start scalping. I have no problems with scalping, by the way. Although I think I'm going to write a book like Scalpings for Scammers? No. Scalpings for Punks. Okay? Something like that. I have no problem with scalping. I have the problem with the way people scalp. So if you have a plan and you see this, and we're here tomorrow, and on a 5-minute or 15-minute chart, it starts to do this, now I'm going to scalp like a son of a gun. Scalp, 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 based on my 4-hour chart. Okay. Then I'll look at a 15-minute, observe the rollover at this price. So now I have price plus time. So now I fire for effect. Okay. I thank you, Stephen. You know, I did set something up, and I don't remember how to do it. I don't remember. It's actually built into this thing. In the webinar software, I built it in. I should see if I can find it. I'm going to get distracted. Let's not do that. We'll find a way for you to buy a cigar sometime. Actually, I'm still trying to fill my wine cellar. So it's all beautiful mahogany, and I have a huge humidor for I think it holds like 500 cigars or something. But I think the wine is more important, so I got empty shelves. It needs bottles. So maybe it'll be a wine cellar fund. What ammo? Yeah. So anyways, thank you for that. I appreciate your positive thoughts. So anyways, we got all of that. And Marina's already on the pound, right? So she's taking it all. Let's go into here. Leroy says a legend. Goats are legends? Cool. Legendary goats. All right, so let's go back to this gold. We got to move this over, and then we got to go further out so I can show you the logic. Okay, we had this set up as support. That support is legitimate, totally legitimate. And if the market's going up, we had a target. This is the target. Okay? So, has that failed? Well, support has failed. And there's been a fundamental change at a central bank and all that. So what do we know? Well, it was riding the 21, which was bullish. It was above old resistance. So that for here, when we were up here, we were above this, which is bullish. Okay. And if you're a bull, let me delete this now. And if you're a bull, this area and this area is supportive. Okay? So you have 1, 2, 3, and 4 reasons. Minimum of 4 reasons that if you are a bull, liaisons, if you are a bull, remember it doesn't make you a bull. If you were a bull here and 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 here, you should still be a bull. And therefore, with all of that information, somewhere around here is your buying opportunity, and based on that, this is where what your target price is. I literally named the exact price. Cool. So now you might say, wait, you're wrong, it's falling, I told you it was going to fall. Like, whoa. First of all, this market only tells you one thing. It was bullish, And you may have lots of reasons to remain bullish. It's all it is. It's definitional. Okay. Now, if you want to be a bear, there are bear setups there, but they're higher risk scenarios under those conditions. The best one is there's the price to sell. So if you are a bear, so I go in because it made a higher high. I go in thinking, well, it's more bullish than bearish. But if you were a bear on gold, great, wonderful. That would be, you remember how I just showed you how to plan A and plan B? That's actually plan A entry. Plan B entry would be something like this. There's your plan B. So it's just, the only difference is your bias. And if you were a bear, you had nothing to do here, 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 nothing to do here for sure, nothing to do here. Okay, and then you can say, well, because of this consolidation, I believe it's going to roll over. So your plan A may have been here, and then maybe throw in some Fed, like I don't think the Fed's going to cut or whatever. You got your alpha. Great, that's your alpha. You trying to outsmart the market. It's not going to work on the long run. I already covered it. You see that? On the long run, if this is your trading, like, I told you it was going to fall, if that's how you trade, you will lose all your money. The way I teach you to trade is like, okay, if you're a bear on gold, that's cool. You need to plan out prices. Now, your plan A, which I already identified after all this consolidation, that's still a very high risk trade. At the very least, you need a lower low first, lower than even the lowest low, not even this low. At the bare minimum, the first level of low before you could really trade. And so really what that means is this is plan A. The reason for that is you are not outsmarting the market anymore. You could say, well, I felt gold was going to get weak, and then with this change at the Fed, that gives some dollar strength. That's good for me. Okay, then I waited for the lower low. Then I sold at a lower high roll reversal cluster of resistance, and now I'm taking it down. It's not this I told you so. It's the charts changed to confirm my hypotheses. So anyone that was saying, and there's a few people like, I told you, you said it was going to go up, and then I told you it was going to, whoa. First of all, I've never once said anything was going to go anywhere. The market was bullish. We were above support. We had broken resistance. We're going through swing channels. So based on any bullish analysis, this would be the target with lots of very logical entries. That is a solid trade plan. Things changed. So now what? Now you can be a bear if you want. And you'll have at least some technical analysis on your side and some legitimate fundamentals on your side versus guessing. And even this idea of like betting against the market, because I just gave you 4 reasons why the market technically is still bullish. So if you're betting against that, you're a gambler, a degenerate gambler. And I'm trying to change that part of you. So you might have had some really good, awesome fundamental reasons. Now, somebody said they read somewhere that people are dumping gold because of, dude, this does not confirm that, by the way. Let me just tell you, this is dollar strength, not gold weakness. And it has to do with too many people betting against the US dollar based on their interpretation of the Fed policy. Now we learn more about the Fed policy, and they're like, oh my God, the Fed's not nearly as bearish as I thought they were going to be. So they get out of those bearish short positions, and now they're bulls on US dollar. This has nothing to do with gold per se. Okay? So don't believe any of that nonsense. All you can say is, well, I wanted gold to go down, and I noticed there's 2 good prices for the month of August. This is a good one, and this is a good one. So I am going to put trade plans together to confirm and deny these entries. And so you say, well, I could sell here, but the market is still technically bullish. What kind of person sells in a bullish market? Someone who eventually will be broke. Mentally, physically, and financially, and spiritually. Because one day it's going to crush you. And you say, well, it was me against the world. That's a dumb way to trade. Now, don't get upset at me if you think I'm talking to you because you said something. I'm not talking to you. I'm talking to the aggregate. Listen to me. If the market is technically bullish and you're a bear, you're going to destroy your account and probably your self-confidence. Okay? You understand? And funny, I just said that. I'm looking at the chart and some people think that I'm talking to somebody. No. I'm talking to everybody. If the trend is up, don't be a bear. Now, you might want to be a bear, so you wait for a sign that someone else on the planet is on your team. It's not you against the world. You want this to be your reality. Okay? That's the message I'm trying to get across. I want you to take control of your trading. You can have the craziest hypotheses you want. I really don't care. That's your alpha. You're like, because of the migration patterns of the elephants in Africa, I want to sell gold. Great. Now confirm or deny your hypotheses using scientific methodology of technical analysis. And if you can't do that, you're not going to be a good trader. Okay? You understand? Simply wait for a lower low, lower high, at obvious resistance. So you draw a chart and you're like, well, this is obviously resistance on a monthly. This is obvious resistance on a weekly. This is obvious resistance based on price action. This is also obvious resistance for market. So I got 1, 2, 3, 4, 5. I have 5 reasons to short. If I'm a bear, if it does, now I got to go to yet another color, if it does this. So that might occur tomorrow afternoon after non-farm payrolls. It might occur on Monday or Tuesday of next week. I am not talking hindsight. I'm talking 3 days ahead. Okay. Ramirez says, can you please do peso and lira? No. Why? Well, we talked about this yesterday, I think before and after the news. We'll talk peso here. I'm going to look at gold here, but I'm going to talk peso. You know what? That might be confusing, so let's do it this way. Okay. What kind of trade is the peso trade? What kind of trade is it? It's a flow trade. Which means it's not technical and it's not fundamental. It's not seasonal either. What's up, DP? So let's go back to this. It's a flow trade. What does that mean? It's simply that we know $2.63 billion between yesterday's and tomorrow, okay? And we talked about this last week, this week, yesterday. So I'll do it one more time. This is a flow trade. We know $2.63 billion is going to move from the United States of America to old Mexico. We know that's factual. I might be off, and maybe it's 2.62, maybe it's 2.64, but just cut some, give your brother some slack here, okay? Anyways, so we know 2.6 is going to move. It's going to flow. Great. So what I said yesterday and the day before is 2.6 billion, if you're Mexican, is a hell of a lot of peso. Okay? If you're 2.6 billion to the U.S. economy, it's not even a drop in the bucket. Yeah, Red is like, this is an old recording. Well, we should know this, right? Right, Red? You should know this. Oh my God. Here, John's been blocked. I gotta turn my marker off to allow him. So John says this is a scam. Thank you, John. Thanks for coming in today and contributing to the conversation. All right. So let's go back. So that's what happens. We know that for a fact. But when the dollar is strong, what did I just say on the other currency pair? You do not sell a strong dollar ever, 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 forever, ever, ever. Never, ever, ever do that. Because 2.6 billion to the U.S. economy is nothing. To a $5 trillion a day, I mean, that's nothing. It's just simply nothing. So if the dollar's already strong, don't buy the Mexican peso. And you're saying, well, Wayne told me to buy the Mexican peso. No, listen. If the dollar happens to be weak anyways, you're going to get a nice move that way. But if the dollar's strong, nobody gives a crap about the Mexican peso, bro. You know what I mean? See what I mean? So you don't trade blindly, right? See what I mean? So you have to think a little bit more of, Wayne told me at the end of the month I should sell. No, think a little more. Because you also need technical analysis to find the right price and time to short. But you should also understand, like right now, I think the dollar gained 3% yesterday on the really pathetic Fed meeting. Just pathetic performance by Powell. Pathetic. Like really embarrassing. It's the worst probably. I mean, the worst thing I've ever seen was Geithner. Oh my God. That was the worst thing I'd ever seen in my entire life. The world was on the brink of collapse. And there was going to be a big press conference on how the U.S. government was going to save the entire world. And that it was going to be on Thursday. Geithner was going to reveal the plan from the entire government to save the entire U.S. economy and global economy from going into depression. So things start building up, things start building up, things start building up, things start building up. We're getting closer to Thursday, closer to Thursday. Well, then Wednesday afternoon, they're like, the press conference has been moved from Thursday to Tuesday. Oh my God, why are they moving it? Oh, well, maybe he's got a super amazing plan. They're going to do something big. They're going to spend $1 trillion. They're going to do something, but it's so big that they didn't have time to really pull all it together and truly announce it. So now they're going to move it to Tuesday. And now the whole world talks about it for 3, 4, 5 more days over the weekend. It's the biggest thing on the planet. Like, oh my God, please, U.S. government, save me from depression. So we finally get to the Tuesday, the whole world stops breathing. When the cameras turn on and Geithner walks on to stage and he's sweating and he's jittery. And you're like, fuck, this guy doesn't have a plan. He doesn't know what's going on. And he starts talking and you're like, there's no plan. It's the end of the world. And that actually happened. That's the worst thing I'd ever seen in my entire life. It was so big and so bad. Now, Powell yesterday wasn't that bad, but he's like, yeah, we might cut rates, we might lower rates, we might raise them. Oh, that's a really good question. How does cutting interest rates help the U.S. economy? Next question. He was asked that 2 or 3 times. How does cutting the interest rates help? He couldn't answer that. It was really funny, right? So it wasn't nearly as bad as Geithner. Let's be clear with that. He came out and he sucked. It was stupid, right? It was stupid. So, but oh my God, the Geithner thing. I think the stock market dropped like 5,000 points in an hour. Like, it was amazing. I was there, and it was amazing. So Geithner saved himself, right? What did Geithner do? Like 2 weeks later, he came out and he's like, oh my God, no, I have a plan. So he forced some banks to take billions of dollars. Forced them. Other banks that should have failed gave them billions, and I mean like multiple billions each. Bank of America, you have to take $5 billion. JP Morgan, you have to take $8 billion. You know, all of this. And by the way, Bank of America, you have to save Merrill Lynch. And over here, Wells Fargo, you need to get saved over there. And so who's going to buy US over there? And they're forcing these banks to do things. And like, I remember Bank of America is like, we don't want this money. You have to take it. And JP Morgan's like, we don't want this money. You have to take it. Now, Goldman Sachs is like, oh my God, the government's giving away free money. And they're like, well, you have to be a commercial bank. You guys are an investment bank. So Goldman Sachs became a bank so they could get the free money. That's really funny, right? So anyway, so the government Geithner is just like, here it is, take it. You have to take it. Don't say no. Because if you say no, then everyone will know the ones that are taking it are weak, and then they'll be run. So everyone has to take the money. So they took all the money. So the guy, who was it? Was it Thane? Who was in charge of Bank of America that time? He bought himself a jet, and he spent like $2 million renovating his office. Do you know why he did all that with the free money? Geithner gave billions and billions, sometimes to people that didn't want it. And did you know what? He didn't say there was anything they had to do with it. There was no required tracking or procedures. There was no goal. They didn't say you had to do this on mortgages. You didn't have to spend it on this. We're not going to follow up with you every month or every few months to see what you did with the money. They just simply gave them the money with no tracking, no responsibility, no focus, no goal, no nothing, just gave them the money for free. And then they're like, what the hell? You bought a jet with it? And they're like, well, yeah, we didn't need the money. Isn't that amazing? That actually happened. That was the follow-up to sweating bullets on camera and just frozen like a deer in headlights. There's no plan, and I don't know what to say. And they didn't have to pay it back. Now, many did because like JP Morgan's like, we didn't want this money. We didn't need the money because if we take the money, we look like all our competitors, and our competitors should go out of business because JP Morgan is in sound financial condition and everybody else over there sucks. Like, they should go out of business. JP Morgan should take over that crap. You should form a bad bank, get rid of all their toxic assets, and we'll run all those banks properly. But no, the socialist big dog communists, they're like, no, we'll bail everybody out. People that shouldn't be bailed out will get money, and people that don't want money will get money. And that is pathetic. What a pathetic response. Pathetic. Yet I think Bernanke did some amazing things, like the first time I can ever remember, and I think it was never done before, there were things like the Fed, the Bank of Canada, the Bank of Japan, the European Central Bank, the Bank of England, the Swiss National Bank, I think the Bank of Hungary, the Bank of Poland, you know, a whole like 20 banks all cut interest rates at the exact same moment. Ben Bernanke got on the phone, called everybody and said, we need a coordinated global response. Like, that is amazing. I'm like, that is amazing. Bernanke, and then he made shit up like, we'll try Twist, we'll try this, we'll do QE, we'll do QE2, we'll do QE3. But this guy was smart, man. It was good. The government, the only thing they did that worked was cash for clunkers. And they bailed out the U.S. auto industry. So now you can buy yourself a Ford Focus. Like, that's what the world needs, is a Ford Focus. Gee, criminy. Good job. Let's save them. Right? So anyways. Woo! But do you see I have a bias? Do you see I'm opinionated? This is important because I can translate that into a trade. If you open your charts looking for a trade, you'll find one, you'll be late, and eventually you will lose money. So today is a Thursday. You need to be planning out what you're going to do tomorrow. If you don't know what you're going to do tomorrow or next week, you will lose as a currency trader. If you don't know what's going on, you are not going to be able to trade. Yeah, random name says Ford didn't get bailed out. You're correct, so I apologize for that. They didn't get bailed out. Now, the Ford was still owned by the Ford family, so there was some pride and all that in, right? Now, I think they were forced to take money. No, they didn't. But you know what? One of the things that Ford did is they used the Ford logo as an asset and basically hawked it at a pawn shop and was able to survive without a bailout. They used the capital and the assets they had. Literally, I'm not joking, the rights to the Ford logo. They leveraged that, monetized it, got cash, got back on track. Then cash for clunkers started to work, and people were trading in their crappy cars for good new cars, and they were getting 0% financing, and the prices were ridiculous. Actually, if you remember, if you go back like 8 years, I did a presentation on how you could get a free Ford F-150. Absolutely free. And I showed you how to do it through intelligent financing. Okay? So anyways, and GM did get bailed out, right? But remember, GM is not an American car company. Yeah, it's owned by Americans, but they sell almost all their cars in China. The only thing people in America drive is a Corvette or a Cadillac. Everything else is sold in China. Look it up. It's something like 70% of if you get rid of Cadillac, then you get rid of Corvette. If you look at it, it's something like 70% of all those GM cars are sold in China. In America, if you drive a GM, or not a GM, I should say, like a Chevy, it's either a really cheap car made in China or made by Mitsubishi or something, or it's like some old man's car, like a Buick. Who drives a Buick? Tiger Woods drives a Buick. Well, they pay him $20 million a year to drive a Buick, right? So in America, you're like, that's an old man's car. My grandpa drives a Buick. But they love them in China, right? So anyways, Ford leveraged their logo, got money, saved their company, And then Clash for Clunkers saved the car industry, right? The market, the car market, and then they started doing well from there. But we have to translate this economics, right? You have to translate the economics into a trade. Okay? So I think, like, how about this next week? Okay? You might have to wait 2 days for that. Yeah, I know, right? Well, what else are you supposed to do? Sell at support? Well, that sounds dumb. How many people want to make a career selling at support? You're going to wait till it hits support and then you're going to sell. Well, that's dumb. You're like, well, but Wayne, it's falling. Yeah, it's falling today. Someone's going to take profit. It's going to come up and then sell here. So here's my plan A. I might get it tomorrow. I might get it Monday or Tuesday. Well, what do you care? Do you sell at support? No, I don't sell at support. Ever? Never. I sell high. Okay, good. So where would that be? Well, I'm interested in this price. See, now it gets easy. I'm interested in that price and I'm interested in that price. Cool. So now we have price. Right? We got this. We have price. We got that set in stone. You can tell me the exact price going back, whatever it is, but you can go back 3, 4, 5, 6, 7 decimals of price. Like you got that nailed tight. So what time will you get that price? Time. What time will you get that price? Because remember, we have price here and we have time here. So we have a price time continuum. So at what time will it touch this price? Well, somewhere between never and somewhere in the future. Okay? So why would it go back there? Well, you see the support? What happens to bears when they're at support? They take profit. Okay? Which means they're short, which means their brokers offset their short positions by entering a long position. Price drifts up, and we find ourselves tomorrow selling this. But we have NFP. NFP could really screw that up. All right. So if NFP screws that up and drives us back up another level, well, we still have this. So you have two trade plans, two prices. So we might hit this tomorrow and drop like a ton of bricks. We might hit this tomorrow and drop like a ton of bricks. I could even consider something up here. But that wouldn't be even next week. That would take me probably take me 6 trading days. But if I was a bear, I might try that up there too. Somewhere in here. So the first opportunity is probably there. That might work. This might work. And this might work. I have 3 plans. I just don't know if I'm going to get any of them. And if I do get one or some of them, on what day and what time? Well, that's easy, because now I just wait. I think the best one's here. The most aggressive one is here. So I might find myself just after NFP, selling this like a dirty dog. Okay? Just like physical law, you need space and time. Absolutely. It's actually, you can throw in the theory of relativity too, because, relativity, it's relative to your perspective. Okay? Imagine you're on a moon and there's an asteroid coming this way and an asteroid going that way. And the perspective on all 3 is different. Okay? It's relative to where you are in space-time. Okay? That's what theory of relativity is. From your point of view, okay? So another example of this is, what time is it right now on your watch? And you look at it and there's a time. That's Earth time. So you think time is a constant thing, right? Well, when you're in space, you put a satellite in space, and the time for the satellite is different for the time on Earth. Literally the time. I'm talking about time is different. So the way that your GPS works, most people think it tracks where you are on Earth. That's not true. The way a GPS satellite works is it tracks where you are in time. GPS tracks the difference between the time you're at on Earth and the time that the satellite is in space. And again, you might be thinking like time zones. No. I'm talking about where you are in space-time. There's a difference. It's relative. There's a different space-time. The time. Most people, this gets really weird. The time is different. So it calculates the difference in your time and its time, where you are, and then can calibrate. This is why you need 3 satellites, in fact, because they're trying to triangulate where you are in space-time. So it's all relative to where you are and where the other satellites are. It's really amazing. So it's relative. So are you a bear here? Yeah. Right? But then you can change your time frame, right? Are you a bear here? Yeah. But you could, let's say, drop down to a 1 minute and you might be a bull. Okay? So now you look at this and you say, oh, well, we're at obvious support and we got a double bottom. So if it makes a higher high, higher low, you might be a bull. You got a double bottom at support with a higher high. So you might buy a higher low, right? So in that case, on this time, because remember, time is here and price is here. See where the price is right now? If I'm on a 4-hour chart, the price is the same. The time is the same. It's right now, and that is the price. So why are you a bull here and a bear on a 4-hour? Well, it's relative. Okay? Relative. Theory of relativity. It's just Einstein. Okay? It's just Einstein. And some of you might know I actually worked at NASA for 2 years. And one of the most amazing things I've ever done in my entire life was I was put in charge as commander of the space shuttle of a team of 6 or 7 other people, and we docked the space shuttle at the International Space Station at NASA on NASA simulators. We crashed it 6 or 7 or 8 times in a row, but the 9th one stood up. We docked the son of a gun. Not many people can say that. Cool. So anyways, well, it's been an interesting day. Why don't we pull the plug? Yeah, I got NFP tomorrow. Non-firm payrolls at FX Street, number 140. So hopefully you visit there at fxstreet.com and say hi. Right? Maybe you can say hi. I don't have a link or anything, so you just type in FX Street, NFP Live 140. So we're coming up pretty close to, it's a long time. So thanks for hanging with me, everybody. I like you in my life. You're good people. Every once in a while, maybe once or twice a day, we get someone to come in and say, hey, you guys suck. Forex is a scam. You have too many lines in your chart. You obviously don't know how to trade. What a loser. He's got so many screens. He's a loser. Why do you need so many screens? You have screens. We always get 1 or 2 of those, but they're funny. They're funny. Everyone else here is quite serious, quite focused. I've known most of you for 5, 6, 7, 8, 9, 10 years, sometimes longer. So you're good people. I'm very, very grateful to have you in my life. You make me want to work. I get up early. I stay up late. I read things because I feel like I don't want to let you down. So that's how I roll, and I like that. You keep me sharp. You keep me focused. I'm already passionate, but it's good to have a desire to improve, and you definitely provide that. And of course, your companionship is very much needed as well. So thank you again for being in my life, not just every day, but for years and years and years and years. So that's really cool. So peace on earth. May the pips be with you. May our profits be above average. And there are plenty of other videos on YouTube that you can watch. Feel free to click on any of them. And I'll see you guys at FX Street. If not, I'll see you on Monday. Cheers.